In this video, I'm going to show how you can use time cycles and median lines together to identify and execute trade opportunities. I'll be doing this using Google as an example, as we may potentially get a trade opportunity this week. We are on the Google daily time frame, and what we can see here is roughly a little more than 2-month cycles here in blue, and about 4.5 month long cycles here in pink. And as you can see, we may have bottomed for this 4.5 month long cycle, and I believe we have. We're going to discuss exactly why I think we have right now. First thing we want to do, as we believe we're moving into a trough, is identify a potential target. We do that typically by using a standard median line set, which I will use yellow for the warning lines in a standard median line set. And then this alternate one, you'll see blue warning lines. That's going to be for a modified shift. I'm going to remove this for a moment. We'll put that back on in a minute. All we do to identify a good target for one of these troughs is take the prior cycle, so that's the prior pink cycle here, high, the initial trough of the current cycle, and then what we believe to be the high of the current pink cycle. And you can see it gives us these nice median lines, and we hit that target exactly. This green line here is a trend line I put after this target, so we can kind of ignore that for right now. But we hit this target perfectly in roughly the time period expected for a trough in the 2-month cycle, as well as the 5-month cycle, 4.5, 5-month cycle. So the first check in the box is that the target was hit. The second thing we'll look for is, did we get a reaction from that target? Now, you can go through the median line before you get some type of reaction, or you can come pretty close to it and then get the reaction. In this case, it was spot on, and we did indeed get a reaction. The next thing we want to look for is, did that reaction break the trend or break the median line set that brought us to this target? And so for that, we will put that modified shift back on. And you can see for the modified shift, we used high, low, high. We tracked pretty well within this range, right, within these warning lines to the target. That reaction broke us out of this upper warning line, which is another good confirmation that the longer term pink cycle trough is in. You may be asking yourself why I'm using two different kinds of median lines. One I referred to as the standard median line set, the other as the modified shift. It depends on what the pivots look like. If you have a very sharp increase or decrease in price, you're likely going to use a modified shift. I also like to use modified shifts for longer term trends. Like you can see here, I have a very large median line set on, which we have achieved that target, and we're currently tracking along the median line in that right now. Otherwise, I will generally use a standard median line set, which you can again see here. It's the yellow, and it's what we used for this target. Now, you can do this, I will show you really quickly, for any of these cycles. We grab the standard set. We'll look for the target here. We go to the prior pink cycle, so this pink cycle, prior high. Current cycle, which would be this one, current cycle initiation trough, to the peak. Did we achieve the target? We did. In fact, not only did we achieve it, we actually exceeded it. Like I mentioned a moment ago, you can exceed it before continuing on out. Like I mentioned a moment ago, I'm going to take this off, but like I mentioned a moment ago, we would also want to see, to confirm that trough, that the median line set that gave us the trend down to the trough was broken to help confirm that trough. Now, in this case, I'm not going to use a modified shift. I will use a standard set, and it's going to be different. And so here is a perfect example of how you might see the difference of when to use a modified shift versus a standard set. This is high, low, higher high than the original pivot point. And how did this target work out? We can see it worked pretty well here. It actually broke and closed above for a day and then gapped down underneath and kind of did the same thing. And then when we actually came up to the upper warning line, we actually gapped above it before continuing on up. But once we broke out of this, that did confirm, this was a bit late, but this did confirm this trough was in. Let's get rid of that median line. We'll take a look at one more. We'll go back a little further here. We'll grab a standard median line set, and we're going to see for this one, we go prior pink cycle high, current pink cycle trough, current peak. This one we did not reach the target. This is a good example just to show that it does not always work. Nothing in trading works 100% of the time, but that doesn't mean it can't be helpful. What was still helpful here, if we get rid of this median line set, is the correction or the trend for the correction. Once we broke out of this median line set and we came and we actually back tested it, I discussed this in a couple of my Apple videos, how this is not uncommon to break out of it and then come and back test it, but the trough was in. So this did confirm the trough, even though we did not hit that longer target. That is why using multiple confirmations can be good, because sometimes one can fail while another can suggest that the trough is in. So back to the current price action. We have found our target, we've achieved our target, we've broken out of this median line set, which you're not waiting for this to potentially bottom before putting these on. As I had mentioned in the Apple videos, if you look at my first couple of Apple videos, I had identified the target using very similar pivots as far as time goes on the Apple chart, and I used those to trade, and to trade very well to the downside, looking for the recent trough in Apple. And actually, in my recent Apple videos, I've discussed how I might look for a long position in Apple. I'm not considering that as strongly now because I think Google is a much better trade. But that's besides the point. Let's get back to what we're doing here. So I'm going to take this off now that this is no longer relevant. It could be relevant. We could come and back test it. I will, after this video, put it back on, but I just want to keep this chart as clean as possible for right now. So we're pretty confident that the trough is in. So what do we do next? We need to identify a target. We can again use median lines to identify a probable target. Now for this, I will use the magnet. Before I was just freehanding it, guessing at it, getting pretty close, but I want to be very specific now for the target. And we simply go prior cycle low, prior cycle high, current cycle initiation trough. And you can see we've already moved quite a bit towards the target. Sometimes you get there pretty quickly, sometimes it takes a while. Either way, there are ways to get into the trade. Before we discuss the entry for this trade, let's take a look at some prior examples to see how this played out, because that's going to be important to help us figure out what we might expect as to when we should expect to achieve this target, if we even do achieve this target. So we'll go back to the prior cycle, and we're just going to do the same thing. So this is the prior cycle, prior pink cycle, initiation trough, high, to the current cycle, which is now actually a cycle ago, initiation trough. And here, for now, I'll also take this off just so there's a little less going on. I'll take this off as well. And so we can see we did indeed achieve this target, right? We troughed. And how many days passed before we hit the target? 18 days. Okay, we'll keep that in mind as we go forward. It took 18 days to achieve that target. We'll do the same thing for the prior cycle. Low, high, low. How many days until we achieve the target? I don't like the magnets on for this one. 15 days, right? Maybe 16. It didn't really achieve it until this one. 16 days. Here's the next one. This one took 21 days, and we'll also go back another one because this one is a little different. So if we look back here, this was actually a down cycle, but that doesn't change anything as far as how we're going to look for a target here. Low, high, low. Now this one played out a bit differently because we were bottoming. This was pretty close at 28 days, It ultimately didn't really get there. It actually surpassed it after 91 days, but 28 days was pretty close. So we can see this was the longest it took to achieve that target, was 28 days. This is just in the past, 4 cycles? So we can use that for the current cycle. We can expect, we'll put this back on here, but we can expect that if we are going to hit the target, we will likely do so within 28 days of the trough. And now some time has already gone by. It's already been 10 days, and by Monday, that will be 13 days. Knowing about how many days we should expect before we hit the target can help us identify the best option or spread. It depends on exactly how the trade targets and timing work out for what's best, but it can help us identify the optimal options to put on for this trade. Okay, so you'll see I also put this corrective median line set back on, and I did that because sometimes, well, we saw in the past, it actually just gapped right over it. Sometimes it can gap over it. Sometimes it can run through the upper warning line. Sometimes it does find a bit of resistance there. So I want to leave that there as a potential target 1 for a potential profit point. Okay, so how do we enter? This is where shorter cycles are very useful, but unfortunately Google doesn't have a consistent 2-week cycle like Apple does, or a consistent shorter cycle of any length really. It has a wildly inconsistent 1-week cycle. It's not only wildly inconsistent because it can trough anywhere from 5 days to 10 or 11 days, but very frequently it's not even a prominent trough, so it's very difficult to track. So I don't even track it on this chart. I just keep a mental note of it. However, looking at the Qs and the E-mini futures, we're expecting a market trough around the FOMC on Wednesday. Now that particular trough can come in many ways, some of which may nullify this trade idea. However, that's a little bit outside the scope of this video, so I'm not really going to get into that right now. The point is that the FOMC could help the market and Google find a trough. Google is currently outperforming the Qs over the last 2 weeks, so if the Qs do trough, it is likely Google will be a big part in lifting the market up out of that trough. So if we get a modest pullback towards the 10 SMA, and then see a shift in momentum by breaking the prior day's high, this is something I've talked about in many other videos, we can then consider taking the trade. And so what I mean when I say breaking the prior day's high, this is not necessarily relevant towards what's going on right now. I'm just looking at a random part of the chart here. When we're downtrending, lower daily high, lower daily high, lower daily high, lower daily high, lower daily high. Here we break the prior day's high. We're seeing a shift in momentum. Now, it wasn't perfect as far as identifying the trough, but it was pretty close, and it was a good warning signal that the trend is starting to find some bullish momentum, and that's really all we need. But again, that by itself is not perfect, but if we can use that in conjunction with the expected market troughs, that might help us nail the timing a little better here on Google. I've added the 10 SMA here in yellow, so essentially what we're looking for, or what I'd like to see, is just a little bit of a pullback, ideally to Wednesday, which maybe the 10 SMA could be somewhere around 138 on Wednesday. And then I want to see it find support there, and then maybe on Thursday, maybe on Wednesday, if there's a big reaction after the FOMC, it could break Tuesday's high, or ideally maybe Thursday breaks Wednesday's high. I definitely want to wait until after the FOMC, because if there's a huge sell-off, I don't want to just be buying at what I think might be a support area. So I'd like to see momentum start to return back to the upside, and then I will consider entering the trade. Once that potential trough is in place, we can then put another median line set on this chart to help us identify when we might achieve our target, and it can also give us dynamic support that can help us move our stop up. I've removed the 10 SMA, and I put this modified shift median line back on here because essentially we're looking for a lower time frame median line set, just like we have here, to help us identify a dynamic, in this case it's resistance because we're in a downtrend, but here it would be a dynamic support level that will serve as a warning for when we might need to exit the trade should we break below that. I've removed that modified shift, and what we're going to do now is I'm just going to put a hypothetical median line set on here. It would go from low to high to wherever this potential trough comes in. So let's just say it comes in on Wednesday and it comes in at 138, like I said before. Now that is all hypothetical. I'm not suggesting that's definitely what's going to happen, but that would be nice to see, because this would give us a median line target that would intersect with our longer term target within that month time frame that we were discussing earlier when we looked at prior cycles. The longest it took was 28 days. This would be 27 or 28 days. Now it could get there sooner than that, but the other thing I like about this, and again, this is hypothetical, this is definitely subject to change. We need to see wherever this comes in first, this third pivot, before we can make any type of trade decision using this median line set. So again, this is just hypothetical. This will go if it's down here, up here if it just runs sideways. But this would also suggest that even though we are pretty close to this median line set, we're really not getting much more upside from this upper warning line. So it might just be a good idea to take the whole trade right below the upper warning line. So the last thing I want to do is just go back to the beginning of the prior pink cycles and take a look and see how they compare with what we're looking at right now. So if we look at the prior cycle, and we're going to do some measurements here, we'd be looking roughly 15 days in, because that's again where the FOMC meeting is going to be, which is probably going to be a good spot for it to trough. Does that track with what we've seen in the past? Well, here, very minimal pullback, but around 14 days. If we get a minimal pullback like this, I probably will not take this trade. It becomes harder to identify this as a clear trough. What you want to see is at least a couple of days of a downtrend followed by continued momentum. One day is a little difficult. Fortunately, we already do have 1 day, and I would expect some de-risking going into the FOMC. Let's go look at the prior cycle. All right, we're measuring again. See, this was a 9-day trough, so that's earlier than what we'd be expecting here. But that might also be because of earnings. Let's look at another cycle. We do, again, have, this is 17 days. That's close to 15 days. And then if we look at the first one that we had looked at, this one is much more difficult. 19 days, so that one's a bit longer, and then limited upside after that. The others had pretty good upside. So if we look at those historical examples, we had one which would have been difficult to get into, not impossible, but definitely difficult. Another that came early, another that came right on time for what we're looking at right now, and then another that was late and then also did not have a lot of upside. So those are actually not extremely helpful here, but that's okay. We are just identifying the criteria that we would like to see to take a trade. So if it does not meet this criteria that we have discussed by the time we get our trough or our expected trough, then we don't take the trade. This is just how to do this analysis, and you can prepare this type of analysis for a variety of tickers and have a bunch of different trade opportunities, many of which will not trigger. And you don't try to force it, and you don't take those trades that don't meet your criteria. However, should we get a nice little pullback towards the 10 SMA, plus a return of bullish momentum after the FOMC, this will meet the criteria, and this will potentially be a good trading opportunity. As always, thank you for watching this video, and be sure to subscribe for more.